We'll get started here in just 1 second. Just finishing up some things over here real quick. Get a drink real quick. Alrighty. Let's see here. Daisy. ChatGPT cannot spell. Try to come up with what's some freaking I can't think YouTube thumbnails, and whenever ChatGPT tries to spell something and misspell it, it's insane. It cannot spell in pictures, it's crazy. Number two, one. Number 2, 1, number 3, 2. Now we're getting the full concept for them. That's kind of cool. Just put it to draw a thumbnail for it. That's one good. That's actually decent. to how about that? All right, get this kicking off over here. All right, what is up, everyone? It is Friday, December 15th, and stock market has about another 23 minutes till it closes for all the live trading or the good trading for today. So let's go over what has been going on, what I'm looking for based upon my analysis. So starting off, SP 500 right here, we are in a short setup right here. This is just a simple expanding triangle trade, 1, 2, 3, 4. So we put the inside pitchfork on points 2, 3, and 4. So when price closed below it right there, there's your entry point. And then the target is down here on this green line, still hasn't hit it. But one thing I've been doing is just taking it from the high, going down to the entry bar low, which is right there. Let's put the right one on there. And then waiting for price to come back up and hit the 50% and then take it down to the 1.146 just to be safe, because I was looking at taking this one earlier today as well, but I was really thinking that the market was just going to continue to go up for it. So I didn't, unfortunately, take it, which is obviously the wrong decision, because we go over here and look at the Dow Jones over here. Now, this one is a little different. Obviously, setups are different because this thing was in a real high, what's it called? Or was it the Russell? Excuse me, it was this Russell trade right here. Oops. The market was in a real high uptrend right here, and you can see when price broke right there, that's the entry bar right here. Actually, right here is the entry bar. Let's put a black line on it. There's the entry bar right there. So you can see like price came close to the green line, didn't hit it. Actually, hit it right here to be officially out of it. But if you take the from the high down to the entry bar low right there, then you'll notice that price went up back to the 50 and then back down to the 1.146 and also the 1.44. So it actually did it twice. It went up once, right back to it for a 3-point gain, and then hit it, and then back up again, and then for another time for it before it finally just continued going up to complete the trade right there. So that's one thing I started looking at, is just being safer, getting in on these trades rather than just taking down here. Because although it would have stunk, I mean, if you got in right here and took it to like right there where the exit is, it's about a 9.5-point loss. If you get in right here and say you're looking for the green line exit, it's about a 7.5-point loss. So not the end of the world at the end of the day, but definitely not as good as just taking some good, 3 to 4 point scalp profits right here and getting out of it rather than waiting on. But also the kind of the framework of it matters, because I mean, this thing has shot up. This thing, that was when the FOMC, I believe, released, was that Wednesday? Yeah, that was when the FOMC. We'll come back and cover these trades over here later, but I just want to show this real quick. FMC had released it, so there's a lot going on over there. So, you know, it was a little bit risky taking a short right there, but that's just one thing I've started doing. So maybe, you know, the first 2 times it comes back and hits it, it's good, because obviously, like for here, it was great. So looking back at it, I probably should have taken the second one towards it, because you have the high, low, there's the candle breakout right there. We'll just put the breakout entry right there. So if you get it right there, well, then you're already at a better price than right there. Take it down to right there. Look at that 15-point gain. Comes back up, hits it again right here. Take it down again right here, another 15 point. I mean, that's 30 points right there in the S&P 500 right there just today now, which could have gotten in. No, all of these, unfortunately, I missed all of them. I was looking at Russell and other stuff, but it's the way it goes. But that, I mean, that's how it works right there. Now, you can hold it on to a green line down here, because that is the exit. Like, there's the entry. Here is the exit. The green line down here is when he hits, is when this move is officially done. So, you know, the green line is moving up. So longer the time goes, it hits it. You know, it could be in a loss if you just hold it on to the end. So that is why I like utilizing the Fibonacci retracement and extension levels to get you in, and then out of it while you're waiting around. You know, of course, I'll miss out on some that just take off all the way back down there. You know, miss out on that. But I think at the end of the day, this is a safer way of doing it, is doing it off those Fibonacci ones and just keep going back and forth for it. So we still are in a short setup right here for the S&P 500 for it. So we'll just have to wait and see whenever this goes down here and gets hit. One thing it has not completed, and this is the big question I have for this one setup, because it's the using inside pitchfork. Well, I use inside pitchfork for all this stuff, but for the 5, let's see which one it was down here. 1, 2, 3, 4. All right, let's get on the right one here. Let's see. Is this the one I was looking at? Yes, that is the one. So the big question I have is this 8 line from the inside pitchfork move, from the LA Wade move, right there, the blue line, is that a bona fide, I think that's the word, exit level for it? Because I'll show on the Nasdaq as well. I've got a big question mark on it. So I'm very confident right now in saying that, like, so I'm not going to go into how I count the 5 Elliott move. It's just 0, 1, 2, 3, 4, 5. I use the, well, I'll show you real quick. Just use the low to the high, and then look for come down to 23.6 when it hits it and goes back up. Then I'll look for it coming back down to hitting the 23.6 again right there, and then when it hits the 1.146 from the 0 to 3 move, it's right there. That's the 5th point. And then for it to start over, I just wait for price to come back down and hit it right there. It'd be like the next one to go up. So I'm not sure why I did one right here. It's weird. I'm not sure why I did that. I shouldn't be one right here. You take that one off. Should have started right. It should have started, because this is actually the 5th point right here. So it should have started right here. Here should have been the next one right there. But anyways, so it's still the same thing. We still use 0.0, 3, and 4 for it. So like here is, well, the original for it to initialize was right here. So once it hits that right there, that is for sure this 5 Elliott move. There's the lowest point for the 5th point. Obviously kept on going up till it hit the retracement back to the 23.6. But what we start looking for then is, okay, cool. We'll look for when price closes above the yellow trend channel. We're not worried about the stuff below it down here, because we're in an uptrend. Because we are an uptrend. If we're a downtrend, then we look at the ones down below. But right now we're looking at the ones above it. So price closed above the yellow line right there. So the next target is this blue line right here. Obviously went away from it a little bit, came back up, and hit it right there. There we go. Then when price closes above this teal blue line right there, the next target is purple line. Got up there and hit it. Now, the next question I have is, which does seem to hit a lot of the time, but now I have some questions about whether or not it's going to keep on hitting it, is when price closes above the purple line right there, is the next target up here this blue line right here, which is the 8. I mean, maybe it isn't the 8. Maybe it's, let's see what 7 looks like. I mean, maybe it's the 7 line. Look at that. Right off of there, perfect. So maybe it is actually the 7 line from what is still a great gain level for it. And so maybe that is it. So I'm gonna just leave that on there. Actually, I'm gonna change to a white one. It's got a lot of green lines on there. Yeah. So maybe it's that one right there. Maybe that is the true exit for it. Let me save this. Save as Elliott Wave. All right, cool. So maybe that's the true exit. If that's the case, then that one is said and done for it. But needless to say, we still are in a short setup right here from this one going down right here for the S&P 500. And we'll go over here to the spiders real quick, because if this setup doesn't work, then I'm gonna have to scrap the retracement trade setup. And how the retracement trade setup is just simply just using the A, B, C, D. Here's the A, B, C, D's all the way down here somewhere. But how it works is you just go from A to B. Let's put the right retracement trade. Take that off of there. And then when it goes up to the 50, hits it right there. I'm going to take off these so it's easy to see. So it goes up to the 50. That sets it that, okay, if it comes down here and hits 1.146, when you have an A, B, C, D, whether it hits the, I got two different things on there. I got a couple of different things on there. Here it's 50 and go down and hits it. So it's a for sure A, B, C, D trade. So when that happens, then all we do is just change this to the, what is it, right there, that trade. And then when price comes up here, hits a 50, that initializes it. We're looking to take it down to the 38. That obviously didn't happen, so when it hits a 60, you look to take it down to the 50 for all the exits. That didn't happen, so when it hits the 76.4, then you look to take it down the black line, which is just south of the 61.8, and you get in with double the amount of contracts you get in at the 38 to ensure you get a nice little profit scalp for that one. But what does happen some of the times is price continues to move up against it. So if you go the other way and use the Fibonacci extension levels, then the 1.14 the other way is kind of like the top of it right there. Because I've seen it several times. Price continues to go north of it, hits the other way, but then it eventually comes back down and goes back down and hits target. So that's why I'm saying I'm looking for weakness in the S&P 500 for it to come back down, because the spiders are at 469 and looking for it to come down to 448, around 448 for it right there. So far it's holding. You know, we had a little, and I said it can go up a little bit higher than it. That's fine. But if if this thing is just taking off higher, like going like up there or something like that, then no, I'm getting rid of that trade. It's not going to work for it. But if it stays around the 1.44 level and then comes back down to hit, then yeah, that it does happen from time to time. So it is legitimate trade. But when we talk about Nasdaq, I'll show you why with the trade step. If that's in, if Nasdaq continues to go to where I'm predicting it to go, then probably this trade setup won't work, because the S&P 500 will be pulling up higher as well. But also one thing is, since this either the 7 or the 8 line isn't solidified yet, I mean, it may not even be a potential good exit for it. I mean, they may not go up there enough times or even close enough for it to go up there and get hit. Now, it did hit the 7 right there. So if that's the case, then this inside pitchfork trade is done. We don't have to worry about it anymore. And this one is already completed. I'll show you here. I know that's the same one. Never mind. That's the same one for it. So, I mean, that's basically what we're looking for. Now, I don't think we have another one going here the other way. We have, let's see here, put the right one on. Before retracing back down to, all right, there's the first retracement down right here. So let's see, will this one come down and get hit? Yeah, okay, cool. Well, we actually have a 1, 2, 3, 4, 5 right here. 1, 2, 3, 47, 9, 25. There you go, that's the high. There's the low. There's the high up here. So then, let's see. So that when it hit right here, right there, I'll tell you what, let's take this thing off. When it hit right here, that signals that we can put the pitchfork on it, 0.1, 2, 3, 4. And you see price went up, blew through the 1, hit the 2, no problem, went up, hit the 3, closed above it, went up here at the 7, and also hit the 8 line right there as well. So that's how that works. And then if we look for the retracement to finalize it, we finally got it right there. So we'll go ahead and put that right there, meaning we can start another count going with the it higher for it right there. If that's gonna, if it is gonna be one, we do have a real low one going all the way back. Oh wait, no, there's nothing over here. Thought it was one, but anyways, that's what we have. Because you can just start on like days lows and stuff like that. Like you can start it on right here. Here's the day's low. There. Let's see, where's the retracement? Right there. There's the retracement, and then here's another one. Now we just have to make sure that points wave 3 is longer than wave 1. Yeah, it is. You can just totally tell. And then if we want to see where there to be the next one where it starts, there goes the 5th one, goes that high. Let's see what the inside pitchfork trade setup would look like here. And there you go. Goes up there, closes above it, no problem. Hits the 7, also hits the 8 as well. So maybe the 7. I mean, 7 may be where it's at. You know, obviously I'd like to be the 8. Gives you a higher profit potential, but you know, in between 3 and 7 is still really good as well. So anyways, that's how that works. So let's go on over here to the old Russell 2000. And these are just notes I put over here for it that I showed a little bit ago. So here is this is going to be, let me take that out over here. All right, well, hold on real quick. Let me change this to wave 1, 2, 3, 4. So using a 5-wave move, which is going from this one right here, there's 0, or it's all the way back here. 0, 1, 2, it's barely in there. And then 3, 4. And so if we just use it from there, we're still waiting for the retracement to come back down for the 5th one. Let me get out of here. So that's where it closed above it right there. So the target, there's the 8, there's the 7 line right there. So, you know, still got a ways to go. If this is, you know, if it is valid. And obviously the most important thing is making sure I count the waves correctly. Because I mean, look at this. This is going all the way from back here. Let me show you how I got it. So here's 0. Going up. There we go, right down there. Now it keeps on going up over here, but what happens is price closes below it, so you can't have wave 4 going into wave 1 right there. So we just keep that as the low because that's still low. If this one came down and made a new low, then that would be 0, 1, 2 right there, but it didn't. So we keep that as that. We'll wait for a new high to get. Let's see, is that a new high? That is a new high. You know what? Mess this thing up. Wow, just noticed that. Hold on, let's see. 1734.6. Yeah, sure did. Wow, I messed that count up. Okay, never mind then. So it's 0, 1, 2, 3, because that's 1 tick higher than that one. There's the low, and this is, and there is the, you know, there's how we know it's the 5th one right there. But let's see. I don't think there's even been yeah, there would be a retracement. Where's the retracement? It's 5 right there. Okay, that makes a whole lot more sense. Okay, so I messed that one up for the for it. But let's look at see what. So we take this off because that's not legitimate. 0, 3, 4. Yeah, easy. Goes up there and hits it, no problem. Okay, so that one's done. So then let's go over here. Let's look for the low over here. So we can start a new count. To it. I'm not going to spend all the time in this video doing these counts right now, but after I stop the video and I'm doing the streaming, I'll come back and do it. But that's how it works. So what we do have though is this is just an inside, or this is a triangle trade. You can see, take that off, not do that anymore. So here we have points 1 and 2, and then points 3 and 4. You can see we have a lower high of point 3, higher high of point 4 compared to point 2. So within points 1 and 2 are points 3 and 4. That's what you're looking for. I just put this line on there to show that this is just a triangle trade right here, when I call it. So when we put the, I believe that's one triangle. Yeah, that's it right there. So when price closes above, which would be the red line right here, which is that candle right there, signals that's the entry bar right there to go along with it. And then the target is the green line right up here. And obviously that didn't happen. And then price came back down, swapped around, has taken some big moves down right there. And we still have, the reason why that moved the exit right here is one thing I'm looking at is taking it from the low to where the entry bar is right here. So there we have that right there. So there's the entry bar, and there's the low. And we have the Fibonacci retracement levels plus the extension. So what we're looking for is price to come. That's why I got in right back down here, because I'm looking for price to go up right down here. And when price goes up here and hits that 1.146 again, I'm going to call it complete, because I really don't think price is going to scoot all the way up over here. Plus, it went all the way to the other side. And usually when that happens, you want to get out, around where the entry bar was. So actually, I think I'm going to move my exit right around the entry bar, but that's another thing we'll look at to see if it does go the other way. Can you just take it to the 1.146 from the low to the entry bar high right there? But just to be safe, I'm gonna get out right there. And then another way to get into it is if you take from points 1 and 2 and you look to get in it. I put 1.44 from points 1 to 2. That would be the next entry level. Obviously, right now it's used support at the 1.146 level, which is perfectly fine for it. It's looking like there's 3 minutes to go. It's getting a little support from to pop it back up. But going into next week, that's the target exit I'm looking for, is where the original entry was. And that's another reason why I like getting in closer to the 50 from the low to the entry bar. Is even if price does go against you, you don't have to get in again for it. So I'm right here, and then if I get out right there is even better, but I'm hoping it goes up there, because that would make it real easy. What's it called? Exit level moving forward for all these things, rather than having to go off like the entry bar stuff. So that is the Russell 2000. So yeah, going into Monday, we are looking for eventually a pop up. Not saying it could open and go down some more, getting that 1.14, and then eventually pop back up, but are looking for move back up to, what's that, about 2035 from where it currently is. So another 26 points or so. The old Dow Jones, not a whole lot currently going on to it. We do have a potential short right here, but we needed to close below this red line, and we didn't get that because it's just a triangle trade. There's the low, high, points 1, 2, and then points 3 and 4 within it right there. You can see that. So we didn't get it closed below the red line. This right there. Didn't close below the red line, and actually price is starting to pop off some. You know what? We do have now, though, a triangle trade going this way. Now I look at it. See, 1, 2, 3, 4 are within it. So we'll go here, 2, 3, and 4. Yeah, so we do have a long setup right there. For it. That will be the entry. Well, assuming, let's see, another 2 minutes that the bar closes above the red line, then we do have a long for it. Then I'll just go drag the low, and we'll see wherever the there's the entry bar right there. So assuming that closes it right there. I'll look to get in. I'm not going to get into it right now since it's closing close to it, but when the market's open Sunday nights, I'm hoping, it closes right here for now, and then Sunday nights we get a retracement back down. I'll look to get in back around here. The next will either be the green line or the the hard exit. The 1 point is the green line. That's when it's officially over. But I'll have it. Let's see. Do I want to get into that Sunday? That's the 17th. No, I really don't want to get into it, to be honest, because this is all going into Sunday night into Monday, and you see how it's just going down right there for it. So we don't want to get into that, but that's what we do have. So assuming this closes, how much time is left here? 1 second. There we go. So there you go, just closed right there. So the exit's up here that we're looking for it. This is a long live trade right here. I wouldn't get in until at least right here, 37,628 for it. But I don't really like the setup just because of the time frame, because if this doesn't go up and hit the green line up here, then when the market opens on Sunday, it's still going to be a live trade, but you can see the profit potential is sloping down for you right here. So it doesn't leave you in a good spot for it, and then you'll be negative, at 11:45 p.m. going into there So not saying, you know, the market opens today couldn't pop up and hit it and be done with it. Hey, that'd be awesome. But I just don't like the time analysis way. If it was like going to the opening market when we got in there, and you have a lot of volume and everything like that, and that'd be fine to get into that. But anyways, it is a long setup that it is in right now for the Dow, for right there. That's that. Let's see here, 1, 2, nope. 1, 2, nope. Let's see if there's any expanding triangles. All right, going over to oil. Oil was pretty good trade setup today. There's that one. See, this is another one that's in it right here using, yeah, 034, yeah, right there. 034. So there's the fifth one. You see price closed above it. So you're looking at hitting the blue line. Hits the blue line right there, closes above it. Looking at the purple, hits the purple. So then it closes above the purple line right there. I'm looking for it to hit, you know, the 7. Well, it doesn't. It, you know, has taken up down the opposite way, hit the purple line the other way. It's found support down there. So there's another one to watch to see if price for oil is going to rocket up over here and hit the 7 line for that one to be done for it. So let's take that off. We'll take it off. Actually, we'll just hide it. I'm myself to go look at it. Hide. So then, and it also is potential another 5-wave move, 0, 1, 2, 3, 4. Take that off. So when it hits up, if it hits up there, that's gonna be a 5-wave move for this one right here. But today we have a really nice trade set up using expanding triangle. There's 1, 2, higher high 3, lower low 4. So we put this on it. Expanding triangle. So when, let's change it to expanding triangle, there you go. So when price closed above it right there, that's where you're looking to get in for it. And then I think I did have it set up, yeah, right there. But I just went ahead and got in right around here-ish, I think, yeah, and got out. When I get in 71.21 and got out 71.96 or 71.83, sorry. So wait, right there for it, right there, because obviously it did go up and hit the green line, but I was just playing it safe and getting it out a little bit early to ensure I locked in those profits. And then if it did come back down here, sell off some, I could, you know, get in again for it. But went up there and hit it. So real nice long trade for this one. So that one's done for crude oil. Then let's see, 1, 2, 3. If this movement continues to go up before forming a semaphore, breaks a new high, we'll have another expanding triangle trade right there. Let's see. Yeah, 1, 2, 3. So yeah, so this continues to move up, breaks this high right there, and then the semaphore forms. We'll have an expanding triangle trade. We also have potential 5-wave LA move. So if we go down here, there's a 0, there's 3, and it hits right there at 73.23 without breaking into wave 1 at about 69. What's the high of that one? 69.99. Goes up there and hits that first before breaking 69.99. Then we'll have another 5-wave LA move, and we can put this on. Put that on. So if it closes above it, we can look to go long tick to the purple. And then the big question we have is, because it pretty much hits that, it's probably going to go and hit the blue, so we can't take along the blue. But if it goes and breaks the purple, then the big question is you know, is the white line to 7 line, is that a true target for it? And like I said, I'm leaning towards no, just based upon, excuse me, what some of the other setups have looked like. I was hoping it'd be. Doesn't look like it. And the main reason why it's here, the Nasdaq, a lot of stuff going on here in the Nasdaq. Actually, you know what? Let me there we go. That's it all. All right. Back to Nasdaq. Here we go. So this is again the big question I have. Nasdaq there. We'll hide this real quick. So starting off today, let's see what we have. So we have a triangle trade set up right here. There's the 0.1, 0.2, 0.3, and 0.4 within it right there. So we just take the side pitchfork to points 2, 3, and 4. The price closes above the red line right here. Signal go long. There we go. So we're looking at price going up and hitting the blue line up here. That has not happened. We got to retrace them back down here. So again, what I like to do is there's that to the entry bar high. So I wouldn't look to get in until down here to closer to the 50% level for it. And then with the exit being the 1.146, although the true exit right now is the blue line up here. But if price does come down the other way and hits blue line the other way, then we look for getting out closer to where the entry bar was for it. That's where we move the exit to. So that's another reason why I like to wait to get down here to 50%. So you have to get in like once right here and then once right there with 2 contracts for it. So that's what we do have a long trade that is live for the Nasdaq. And then one thing I talked about yesterday in a YouTube short, I'll put that on was again this using the inside pitchfork from the 508 Elliott move. There's 0, 3, and 4. So there was, I think the fifth one was, well, let's see here, where would the fifth one, where would it have finalized for the fifth one? Right here. So right there was where the fifth one finalized, right here. So this was a good one. Take that off of there. Get in right there, somewhere, and the exit the blue line from it. There you go, hit it, no problem. Very next one, or right there, closed above it. It's too close to the purple, but anyways, closed above it, hit the purple, so that one's done. So that's why I really like these 2 levels, the 1, 2, and 3 level. I need a color code of something different though. Probably come like red, white, and blue. That's not, yeah, that's a good idea. Red, white, and blue for it. Be easy to remember. All right, I'm gonna go do that now. 1 is red, 2 is white, 3 is blue. Let's go. All cool. Save as. There you go. Easy to remember. It's a weird looking red. There, switching one. Yeah. All right, cool. So we have the, there would have been a close above it, goes up here, then 1 level, the white line, goes above it, hit the blue line, no problem. So again, the big question we have is the 7 line actually a legitimate exit target? So that's the big question I have for it. You see price come back down, bounce around a little bit. And that's why in the YouTube short videos I was saying if this is true, a true exit for it, then we still have from around the time I did the video, I think price is like right around here. You know, you still have potential over 3% gain left in the Nasdaq. And it did go up today. Is the only, looks like, yeah, the Dow went up a little bit, but it's by far the biggest winner. Nasdaq was the biggest winner today, going up over here. So that is the question we have: is the 7 or the 7 line, is it truly a exit for it? So that is what we're waiting to see for it. But in the meantime, we still are in a valid long trade right here for it. Where's the entry bar? There's the entry bar right there. And let's see here. Look at yield. Maybe to the spiders. Crude oil. All right. Look at Bitcoin over here. A little bit of a longer time frame. Well, definitely a longer time frame. So we'll go ahead and that on there. This is another reason why I'm not sure if this thing works. So using 0, 1, 2, 3, 4. See price closed above it. There's the 5th one right there. One up, and actually 5th one's way up here. Yeah, but that's where it hit the, I think, let's see, 0 to 3. Yeah, that candle right there. So closed, also hit, is above the 1 line. So you take it up there, 2 line, close above the 2, then exit 3 line, hits it right there. But then on this candle right here, look at this one. it closed above the 3 line. So if that's the case, then we look at taking it up to either the 7 or the 8 line up here. But the price hadn't done that. It's gone completely the other way, broke out around the downside, and now it's starting to make a move up over here. So I'm going to hide it, get it off of there. So that's why I'm thinking that either the 7 or the 8 line really isn't one that is a bona fide exit for it like the other ones are. Because as you can see, when it closes above the 1, it goes up, hits 2. When it closes above the 2, it goes up and hits 3. For where, sometimes it does go up there at the 7 line, but then sometimes you get a big retracement down from it. So that's why I'm leaning towards thinking that it's isn't a valid exit point for it. I was just trying to get greedy and get a really big gain from it. But anyways, let's see here. Go back down here. We are in a potential 5-wave move up here. As long as price didn't from up here doesn't come down and break this black line. So we have, why is this red? I must have put these on something else the other day. As long as price didn't come and break this black line down here from this move up here, we're good to go. So if price comes down, retraces to 38,175, that is where the potential, that means that we do have a valid 4th wave. 4th wave could go all the way down to here as long as it doesn't break into the black line before it moves up. And if price goes up and hits 49,645, then we have a valid one. Let's say this, just something like that. We do have room to run in Bitcoin, and I had to go back and adjust my Elliott waves because they were incorrect from what I was looking at the last time. Was this price closed above the purple line, went to blue line? Okay, well, let's look at it, see what it looks like here from this one. 0, 3, 4. So here we have there. Let's see where the 5th one would have been on that candle right there. So there's the 5th one, hits the extension level to make it the 5th wave, close above it, and then the very next one for the weekly one, it just gaps up, so it hits that target, then closes up right here. So we're looking at hitting the 7 line, but then look what happens. All right, so it's back all the way down over here to the 7 and 8 line before it rumbles all up and hit it right there. So that's one of the reasons why it gives me hope that this is valid for it. So if price comes down and hits like the 7 line the other way, just get along there and take it up to over there. But still a lot of waiting to see, what's going to happen with this thing. Let's see here, 0, 3, 4. And you see right here, price didn't break above the channel, so it's done for that one. So yeah, so that's gonna be the video for the day. Just the main thing is, for the spider, if the retracement trade is going to be a legitimate trade, I do need to see what's on daily chart. Yeah, I do need to see the retracement down here, the black line, which is around 448, but that's also going to be, somewhat of a sell off in the market. Plus, we do also have this gap right here. This gap needs to come back down and be filled as well. But if the inside pitchfork trade setup is legitimate, price needs to come up here and hit it up there. So that's why I have more faith in the retracement trade itself than I do the 7 line for the inside pitchfork trade. So that's what I'm looking for, more weakness here in the market, coming back down, hitting that one, and that would complete that setup. And again, plus also majority of the time when you see a gap like that, price will eventually come back and fill it in. We also have some other ones right here. Doesn't mean it's going to happen immediately. It's just that when you get a lot of gaps like that, expect them to eventually come down and get filled or up. I mean, let's see here, like, has that one ever gotten filled? Look, this one's never gotten filled. Or how close did it get? Down somewhat close, didn't hit it, but like we got one right here. So, they can take a while to come back and get filled. but usually we start seeing them stacking up, so we start looking for kind of like a magnet for price coming back there and hitting them. But yeah, so that's what I'm looking for going into next week. The spiders leading the way, which is the S&P 500 futures, from some weakness in the market right down here. I thought about buying some put options, spiders. What's that? 4.5 percentage points decrease. Let's see, what day is that? That day is Thursday, the 16th of November. So let's see what it looks like on here, the 1 hour chart. It's Thursday, the 16th of November. Right there, that's that day. So Thursday, 16th, take it from right there to there. So yeah, about a 4.3 percentage point decrease in the S&P 500 for it. So, all right, that's gonna be the video right now. I'm gonna leave the stream on, so have a good weekend. Be safe. Bye. All right, I'll be back in a second. Let me go feed the dog and be back in a minute. Yep. All right, I'll look at the old, back all the way where I need to go down to, start from the bottom. Here we go. So we start counting them. 0, 1, 2. So I don't like doing these 5-way 11 minutes. You have to count a lot. All right, first one, get you out of the way. Second one, there's that. All right, so we got another one. 0, 1, 2, 3, 4, 5. Let's see where that it. Yep, but it starts back over here. Let's see all that stuff. So 0, 2. I don't think it's going to go up anymore all the way. Come back in it. So that stays as the low. Let's see here. That stays the low. Yep. All right. So there's 0, 1 right there. So one came back in, it can't be it. So there's a new high, but it came back down in it. So we look for a new high. About that. Okay, that one works. There we go. 0, 1, 2, 3, 4, 5. There we go. So this is what it look like here. 0, 3, 4. Yeah. Well. Interesting. Well, I guess it never closed above it, and eventually did. I'm not worried about that. Okay. So still decent. Let's get the other one too that we had. 0, 3, 4. So closed above it, obviously. Which I think it would have been fine for it to be in. Just put it on the candle. So that's 5 right there. All right. Closed above it, and then took a huge all the way down, all the way down. Never hit the white. Yeah, look at that. Maybe it doesn't work. So here was the entry. Entries on this candle right here. There's the entry. There's still plenty of ways to make good money off of this. So what if you take 3 to 4, get it right there, it comes back right up to it. So that might be it. Yeah, these are looking like it may be. Interesting. So I'm thinking as well, if you get a big retracement down to it, you can't keep on thinking it's going to go up to it. You have to somehow get out, which could be your next entry is the 3 and the 4. Down there, so it didn't hit it. You wait till it hits the 1.146 down here. Then the exit is the entry right there, because that still would have been 22 points right there. It's extremely good. Put a note here. Use points 3 to 4 in the 6 fib entry if the 2 or 3 traces. All right. So which other one just did that? Let's see what Bitcoin look like. So do it here. Which one did it do it on? I mean, it did that. So, okay, so it didn't hit right there. So you take points 3 and 4, get in right there, or do you take points 5 and 4? Let's see. Yeah, that works a lot better. So which one are we just looking at? Let's go here. Let's try. Go back down here. So here's 0.5 would be way up here. I think that's it. Use points 5 and 4. No influence to extension entry to new traces. I think that's it. Oh, right there, that's where it was. That looks to be how to get out. Or if one of the levels doesn't get hit, maybe it works for the 7 level. But that'd be a big retracement back down. That's the thing. So there's the 5 to the 4. 1, 4, 6 hit it, and then that one was the entry right there. So get it right here. There, yeah, that one worked just fine. All right, back to Bitcoin. Weekly. There's 5. Yeah, there's points 5 to 4 in there because it closed above it. Points 5 to 4. Went all the way down, hit that. Also the 1.146. And then where was the? There's the entry bar for it right there. And look at that. Goes up there and hits it just fine. So let's see. Entry right there. Out right there. Maybe it looks pretty good. Let's go with the Nasdaq here. So it didn't hit right there. So what we would look for would be right here. So we'll put this on right there. 4, 6 points 5 to 4. So that's that right there. What is that? Let's see. Could even go higher. 0. Here's 0. Man, I need points 5 to 4 yet. It is. Okay, yeah, because that's 0.5 right there because the 23.6 got hit. So we could start a new one right there. So price comes all the way down here, hits that right there. Get that. Zero, 3, 4. Okay, close above it. Points 5 to 4. See how low it went. Let's put the coin on. Went down between there. So then the exit would be close for the entry right there. So that could be it. Yeah, fits down in there too. What's that right there? Let's do color. Let's take it off. So that could be it. T. Change that color. So let's making sure. Exit. Yeah, that's looking like what it is. So I think that may be it. That we could still use yes. It's this one here. Anything I'm close enough to it. So. All right. Let's see. All right. That's going to do it for the stream. Thanks, everyone. Have